Hi, this is Acme with the Bulletin Board Heroes here at Box Markets for Wednesday, the 12th of October. Starting off with the Ftse 100, and we're in this range between around 6,800 and 6,960, yesterday's high. That's also that old March support line, which has become resistance. Want to see an end of day close really above 6,960 to assure us that the worst may be over. Otherwise, we still have the potential, if things get too nasty, to head back down to the lower March support line there, heading down to 66.60. RSI in the 30s at the moment, so still scope for another leg to the downside. And we also have the 50 and 200-day moving averages both falling in parallel, which is not a great look. Moving on to the pound, where the headlines say that the pound is falling again, and it looks as though the Bank of England wants the pound to fall to change policy. But so far we bounced off the $1.10 area, which was basically a support area that was derived from the floor of that February trend channel, or March trend channel rather, and so we have actually bounced within that falling trend channel. So let's just see if 110 can become the new support for this market, despite all the doomsters around at the moment. Moving on to the stocks, and starting off with Alkemy, which just released a little tie-up with BP, a little company called BP, which presumably will be helpful down the line. Here we've had a range between around 90 pence over the last couple of months and £1.20. One would have thought and one would hope that the range will be re-established after the latest news. So 90 to 120, that old September resistance area possibly on the cards there. 50-day moving average rising as well, so maybe that'll drag up the price once the latest news sinks in. On to Chill, which has had its ups and downs over the recent past, but mostly ups in the recent past, well, in the last month or so. Anyway, here we've had high low put in above 2 pence after that trend line break that we had in August, and we've got a rising 50-day line support coming in at that rising 50-day line, so it does suggest that the upside here, which we were looking for up towards the 4 pence area, could be on track, or 4.5 pence actually, by the end of next month, and maybe if we're really lucky by the end of this month, but let's say by the end of next month, up to the 4.5 pence area, which is the top of that broadening triangle from back in April. In terms of the stop loss, probably just the last, well, the October support area around 2.3 pence, but we shouldn't see any real lasting price action back below 2.5, so above 2.5. Looking for 4.5 on Chill. Stock which seems to be quite exciting at the moment, I think I interviewed them a couple of weeks back, is Clean Tech. Here we've had a double bounce off the 50-day moving average in the last few weeks. Neckline resistance there at 47 pence, so an end of day close above that, and we should be back on track for retesting last month's resistance in the 63 pence area. Hopefully that can occur by the end of this month. MACD cross in the making as well, and RSI in the low 50s, which is just the right place for the start of a little rally. Speaking of rallies, Dukemount has managed to build on the rally that we had yesterday, that unfilled gap to the upside. The high yesterday around the 0.18 pence level, or 18.5 pence level, and want to see an end of day close above that to maybe stretch these gains up to the main main 2022 resistance here around the 0.23 pence level. So everything to play for there. Ideally, we remain above the 200-day line, currently at 0.15, on an end of day close, ahead of a move towards 0.25. That would be the best case scenario. Only back below the 50-day line, currently around 0.12, really delaying the recovery scenario. We've got a bear trap gap reversal, and obviously the gap from yesterday, that while that remains in place, makes this look like a pretty decent potential recovery situation. Moving on to Edenville, which I think also had a great announcement yesterday. Unfilled gap to the upside through the 50-day moving average. That's currently around 11.75. Above that, looking for at least the 200-day line at 17 pence. Best case scenario, maybe by the end of next month or something like that, that kind of time frame, up to 25 pence, which is that February resistance line projection. But everything here really depending on the 50-day line holding and with that unfilled gap to the upside off the low, one of our favorite signals, more reliable signals, then we should be due for upside. If you're cautious, maybe you want to see August resistance break at 16 pence, but really the trade here is to look at the support coming in towards the 50-day moving average. On to East Imperial, which has been making noises that it wants to recover. I think there was a China distribution deal a little while back, and that seems to be sinking in now. We've had the shares bounce off the lows again, the 2.25 pence area, which was August support, so that is a plus point. MACD cross as well, buy cross, and initial target here up to 3.25 pence. Best case scenario target maybe by the end of the year around 6 pence, if all goes well. Obviously, we've got the old September highs near 4.75 initially, but should have at least the 50-day line here at 3.25 in the can there for East Imperial. On to a stock which has made good on the triangle setup that we had within a July broadening triangle. Here we can see that Kavango has basically, we had a minor bear trap there at the start of the year below 1.6 pence, and that hammer candle really the driver for recent recovery. Got a 50-day moving average which is now starting to curl up, which is normally a good sign near the lows. That suggests that we should be able to get up to 2.5 pence while we hold above the 50-day line at 1.75 pence. Time frame on 2.5 pence, maybe as soon as the end of this month. Good looking chart from Lexington, and here we've managed to break the main 4 pence resistance area, come back a little bit today, but if you look at the daily chart, there's possibility that we're heading towards the top of a rising trend channel from May last year, as high as 7 pence, maybe by the end of this month, or at least over the next 2 to 4 weeks, something like that. But those two unfilled gaps to the upside, very healthy after a bear trap below the initial 2022 support at 2.65, and so the setup here looks to be a decent slow burn with the saucer-shaped turnaround adding to the unfilled gaps to the upside as well, so giving more comfort there on that. NSCI, the next contender, and here you can see that we've got a triangle formation set up. We broke that trend line there at from back in May around 50 pence, and the 50-day moving average now at 56, above the 50-day line looking for 70, which would also tie in with the current area of the 200-day moving average. You can see that the last time we rallied up to the 200-day line, and we would hopefully do the same at least on this occasion. Contract news from Physiomics. I don't remember what the numbers were. Maybe that's one shouldn't look at that sort of detail, but here we've got a potential trendline break, a recovery signal if we get an end of day close through 2.8 pence, which is the July resistance line. Above that up to 3.6, but let's see if today's announcement will drive more momentum over coming days. Just a couple of stocks to go now. First is Poolbeg, where there was CEO buying, I think director buying last week. Here we've got a situation where we've broken that line of resistance there from the beginning of the year around 6.5 pence. The longer we stay above that, the greater the chance of a move up to 9 or 9.5. Stop loss, an end of day close back below 6 pence, and the 200-day moving average. The key here is that we have broken above the 200-day line after we failed at it back in May. So this is a win for the bulls so far. Finishing off with Sunrise, and here we've got a potential trendline break there, a bit obscure and not exactly big on volume at the moment, but the break of that trend line there at the beginning of the month at around 0.11 pence has delivered some upside, and we could hopefully get up to that March resistance line projection at 0.18, maybe by the end of next month. Obviously, this is not the most liquid stock in town, but here it is for the record. Stop loss back below 0.1 if you are in that kind of trading mindset. That's it from me today. More updates tomorrow.